Hello and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at some of the charts that move the week, so to speak, and discuss current price trends, both on the container leasing as well as on the container trading side. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. We'll start with trading. So here we look at the previous 18 months of 40-foot high cube cargo-worthy containers in 4 locations. So this is Shanghai as a representative of sort of Northeast Asia, then 2 US locations, Chicago and Houston, and then Antwerp here, the orange, reddish-orange line. And what you see quite clearly, of course, is the divergence of prices since end of last year, since the beginning of the attacks by the Houthis in the Red Sea. You've seen really sort of Chinese or Shanghai container prices soar to absolute record heights of more than 3,000, almost $3,500 US for a 40-foot high cube cargo-worthy container, so not even a brand new container. This in turn has prompted the industry to order containers. I've just read this morning that manufacturers are telling buyers that they essentially booked out every single slot all through October, and this has been the case since the beginning of the year, so that this year is expected to be the second highest container delivery year on record, with the highest, of course, being during the pandemic. Now, what we see is that this, of course, has pushed up container inventory to significant levels. And of course, the expectation is that if disruptions in the supply chain that hinder container turnaround times go away, for example, the blockage of the Red Sea or the Suez Canal by the Houthis, or also impending strikes in the North American East Coast container ports, or also the strikes on the Canadian rail, once they go away, then of course that overcapacity will be released or is not needed anymore. And that of course will push prices down. And this is sort of what we believe is already happening here. So prices are starting to weaken. Interesting though, and I'm going to talk about this a little bit more on Friday in our Fundamentals Friday edition, that we don't see container price sentiment to decrease significantly. So in essence, if you ask market participants, they still expect prices to increase over the coming weeks and months. And maybe that's just sort of professional optimism that sort of shows through here. So these are the container prices, and as you can see here, the delta between these locations is starting to narrow again, and that, of course, I'm now going to switch tabs, has an impact on container one-way leasing rates. Here we look at 40-foot high cube, Shanghai to Houston. So how much are you paying, or do you have to pay for using a 40-foot high cube container on that one-way stretch? And that, of course, is a function of multiple things, not least of the container price delta and the price delta expectations between these 2 locations. And again, more on that in our Fundamentals Friday edition. But bottom line, what we see here is that also the price increase here has stopped. Container one-way rates are not increasing any further above that 1,000 to 1,200 US dollar corridor that we've seen here over the past couple of weeks. And we also expect this to decrease over the next coming weeks and months. Now, that's it from us for today. Thanks a lot for tuning in, and see you all on Friday. Take care.